Welcome back to Accountant's Desk. In previous video, we learned the single column cash book, the foundation of cash accounting. Today, we are moving one step ahead to understand the double column cash book, which not only records cash transactions but also records discount allowed and discount received side by side. This is the most commonly used format in day-to-day business, especially in small and medium businesses where cash discounts are very frequent. By the end of this video, you will understand what is a double column cash book, why businesses use it, its format and structure, and how to record transactions step by step. And if you are a small business owner in need of reliable bookkeeping services, just fill out the Google form linked in the description and we will reach out to you. Alright, let's get started. Double column cash book. A double column cash book is a type of cash book that has two amount columns on each side. One for cash, one for discount. This means on the debit side we record cash receipts, discount allowed if any, and on the credit side we record cash payments and discount received if any. When customers or suppliers settle payments early or in full, cash discounts are offered or received. Instead of maintaining a separate discount book, both cash and discount are recorded together in one book, which saves time and provides complete information in one place. Why businesses use double column cash book? Many transactions involve discounts, either allowed to customers or received from suppliers. In business, especially when you sell goods or services on credit, customers often pay early or in full. To encourage this, businesses give a small discount called cash discount. For example, if a customer has to pay 10,000 rupees but pays immediately, the business might allow 200 rupees discount. Similarly, when we pay our suppliers early, they also give us some discount. If we maintain only a single column cash book, we would have to record these discounts separately. But with a double column cash book, we can record both cash and discount together in one place, which makes it much more convenient. It helps maintain cash flow and discount information in a single record. Instead of maintaining separate records, one for cash and another for discounts, we get the complete picture in one book. This is important for a business because at a glance you can see how much cash has been received or paid and how much discount has been allowed or received. For example, at the end of the day or month, a business owner can check the cash book and know not only the cash balance but also total discounts given or earned during the period. This gives better control and clarity over transactions. It saves time by avoiding separate postings for discount transactions. In a single column cash book, if a transaction involves discount, we would have to record the cash part in the cash book and then go to journal or separate discount book to record the discount part. But in the double column cash book, both the cash amount and the discount amount are recorded at the same time, side by side. This means fewer entries, less manual work, and faster recording of transactions, which is especially useful in businesses with a large number of daily transactions. At the end of the period, both cash and discount totals are easily available for preparing final accounts. When the business prepares final accounts like trading and profit and loss account, it needs information about total cash received and paid and total discount allowed and received during the year. If you use a double column cash book, these totals are already available at the bottom of the cash book. You don't need to go through multiple books or ledgers to collect data. This makes the preparation of final accounts faster and more accurate. It improves accuracy and helps in quick cross-checking with ledgers. Because both cash and discount are recorded together at the time of transaction, the chances of missing or forgetting to post any amount are very low. It also becomes easy to cross-check with ledgers. The cash amount goes to cash or bank ledger. The discount totals are posted at the end of the period. This ensures proper matching of accounts and helps detect errors early, saving time during audits or account reviews. So, double column cash book isn't just about adding one extra column, it is about recording, tracking, and reporting faster, cleaner, and more efficient for businesses. Format double column cash book. Let's now understand the structure of a double column cash book. On both sides, debit and credit, there are two amount columns. Left side, that is debit side, records cash receipts, records discount allowed, and right side, that is credit side, records cash payment and records discount received. Date to record the date of the transaction, receipts to record the receipt transaction, ledger folio, cross reference with ledger, discount column to record discount allowed for debit side or received for credit side, and amount column to record cash received or cash paid. At the end of the period, amount column is balanced normally like a single column cash book. Discount column is not balanced. Instead, totals are transferred to respective discount accounts in the ledger. Understanding discount in cash book. Now let's make sure you clearly understand what happens with the discount column. Discount allowed, shown on the debit side, it is an expense to the business because the business is allowing customers to pay less. For example, if customer owes 1000 rupees but pays 980 rupees and you allow 20 rupees discount, then 980 goes to cash column and 20 goes to the discount allowed column. Discount received, shown on the credit side, it is an income to the business because you pay less to the supplier. Example, if you owe 1000 rupees but you pay 980 rupees and the supplier gives you 20 rupees discount, then 980 goes to cash column and 20 goes to the discount received column. The discount column is not balanced at the end of the period. Instead, totals are posted to the ledger accounts. Advantages of double column cash book. Let's quickly highlight the advantages. Keeps record of cash and discount in one place. In a business, when customers make payment or when we pay our suppliers, discounts are often involved. Instead of recording cash transactions in one book and discounts in another, the double column cash book allows both to be recorded together in one place. This makes the book organized and you don't have to search multiple registers or ledgers to get information. Saves time and effort. If cash and discount were maintained separately, it would mean double work, posting every discount transaction in another account. By using a double column cash book, you save time because both details are recorded in one entry itself. This makes the process faster and reduces repetitive accounting work. Gives complete picture of transactions. A double column cash book gives you a clear view of both cash received or paid and the discount involved in every transaction. This helps in analyzing the business's actual cash movement and the total discounts allowed or received during a specific period. It also helps management make better financial decisions. Useful for businesses with regular cash discounts. Many businesses offer discounts to encourage quick payments. If such discounts are frequent, maintaining a double column cash book becomes very practical. It makes recording and tracking cash discounts much easier without extra work. Helps in preparing final accounts easily. At the end of the period, totals of cash and discount columns are already available in the cash book. This makes it easy to transfer figures to the final accounts or prepare statements without extra calculations. It improves accuracy and reduces the chances of errors during closing. For example, let's say you received 10,000 rupees from a customer with 200 discount. Instead of writing it in two different accounts, with a double column cash book, you can record both in one entry. Example, now that you know the structure and concept, let's record double column cash book step by step with the help of an example. Record the following transactions in double column cash book in the month of April 2025. 2025, April 1st, commenced business on 1st April with 2000 rupees capital. April 1st, purchased furniture with cash rupees 250. April 2nd, purchased goods rupees 500. April 4, sold goods for cash 950. April 5, paid cash to Raj Traders rupees 560. April 5, Raj Traders allowed discount rupees 10. On 5th April, we paid to Raj Traders and Raj Trader allowed us discount, means we have received the discount. April 5th, received cash from Karan and Company rupees 600. April 5th, allowed discount to Karan and Company 20 rupees. Now we have allowed discount to Karan and Company. April 7, paid for stationery expenses rupees 15. April 8, cash purchases 150. April 13, paid wages 1000. April 13, paid Sham and Company 400 rupees. April 13, Sham allowed discount 8 rupees. Now on 13 April, we paid to Sham and Company and Sham allowed us 8 rupees discount, means it is discount received. Now let's record the transactions step by step. Our first transaction is April 1st, commenced business on 1st April 2025 with rupees 2000 capital. Here the two accounts affected are cash account and capital account. Cash account is real account and cash comes in the business, so debit what comes in. And capital account is personal account and owner is the giver, so credit the giver. Let's see how we'll record it. This is the format of cash book. Debit side and credit side. Debit side, date, receipts, ledger folio, discount, amount. And credit side, date, payments, ledger folio, discount and amount. 2025, debit side, 1st April to capital account 2000. Capital represents owner's contribution, that is liability, so it is credited. So the corresponding entry for cash book is to capital and cash comes in the business, so it is on the receipt side. Next, purchased furniture with cash rupees 250. Here the two accounts affected are furniture account and cash account. Furniture account is real account and furniture comes in the business, so debit what comes in. And cash account is also real account and cash goes out of the business, so credit what goes out. Let's see how we'll record it. On 1st April, credit side, because cash goes out of the business when we purchase the furniture. So on 1st April, buy furniture account 250. Next, April 2nd, purchased goods rupees 500. Here the two accounts affected are purchase account and cash account. Purchase account is nominal account and purchase is an expense, so debit the expenses. And cash account is real account and cash goes out of the business, so it is credited. Let's see how we'll record it. Credit side, April 2nd, buy purchases rupees 500. After purchases, cash goes out of the business, so it is recorded on the payment side, rupees 500. April 4, sold goods for cash rupees 950. Here the two accounts affected are cash account and sales account. Cash account is real account and cash comes in the business, so it is debited. And sales account is nominal account and sales it is an income, so it is credited. Let's see how we'll record it. Debit side, April 4 to sales account 950. After sales, cash comes in the business, so it is recorded on the receipt side to sales 950. Next, April 5, paid cash to Raj Traders rupees 560. And the next transaction is April 5, Raj Traders allowed discount rupees 10. It is one transaction. So here the accounts affected are Raj Traders account, cash account and discount received account. Raj Traders account, it is personal account and Raj Trader is receiver, so it is debited. And cash account is real account and cash goes out of the business, so it is credited. And discount received, it is nominal account because it is income and credit the income. So let's see how we'll record it. April 5, buy Raj Traders rupees 560 we have paid and we have got discount of rupees 10. So in the discount column we will record rupees 10 and in the amount column we will record 560. We owed Raj Traders rupees 570 but we paid only 560 and received 10 rupees discount. Next, April 5, received cash from Karan and Company rupees 600 and April 5, allowed discount to Karan and Company rupees 20. It is single transaction. Here the accounts affected are cash account, discount allowed account and Karan and Company account. Cash account, it is real account and cash comes in the business because we have allowed discount and Karan is paying us. So debit what comes in and discount allowed. Discount allowed is nominal account and it is an expense because we are receiving less. So debit all expenses and losses. And Karan and Company account, it is personal account and Karan is the giver, so credit the giver. Let's see how we'll record it. Debit side, April 6th to Karan and Company rupees 600 in the amount column and rupees 20 in the discount column. We received part in cash and allowed discount. Cash increases, so it is debited and discount allowed is an expense, so it is debited. Next, April 7, paid for stationery expenses rupees 15. Here the two accounts affected are stationery account and cash account. Stationery account, it is nominal account and it is an expense, so debit the expenses. And cash account is real account and cash goes out of the business, so it is credited. Let's see how we'll record it. Credit side, April 5, buy stationery account rupees 15. Next, April 8, cash purchases rupees 150. Here the two accounts affected are purchase account and cash account. Purchase account, it is nominal account and purchase, it is an expense, so debit all expenses and losses. And cash account is real account and cash goes out of the business, so it is credited. Let's see how we'll record it. Credit side, April 8, buy purchases 150. Next, April 13, paid wages rupees 1000. Here the two accounts affected are wages account and cash account. Wages account, it is nominal account and wages is an expense, so debit all expenses and losses. And cash account is real account and cash goes out of the business, so it is credited. Let's see how we'll record it. Credit side, April 13, buy wages rupees 1000. Next, April 13, paid Sham and Company rupees 400 and April 13, Sham allowed discount rupees 8. It is single transaction. Here the accounts affected are Sham and Company account, cash account and discount received account. Sham and Company account, it is personal account and Sham and Company is the receiver, so debit the receiver. And cash account is real account and cash goes out of the business, so it is credited. And discount received is nominal account and discount received, it is an income, so credit all incomes and gains. Let's see how we'll record it. Credit side, April 13, buy Sham and Company. We paid 400 rupees, that is on the amount column, and we have received discount of rupees 8. We owed Sham and Company rupees 408, but we paid only 400 rupees and received 8 rupees discount. Remember, when discount is allowed, it is expense, so it is debited. When discount is received, it is income, so it is credited. This logic helps to remember entries easily while preparing a double column cash book. Now we have recorded all the transaction. Now let's calculate the total. Amount column, debit side is more than the credit side and the total is 3350. We recorded on the both the sides total 3550 and the discounts are 20 on the debit side and 18 on the credit side. Now at the end of the month, that is 30th April, buy balance carried down 675, that is total 3550 minus all the amounts from the credit side, we get 675. Then on 1st May, to balance brought down 675. At the end of the accounting period, we total both sides of the cash column and find the balances like in the single column cash book. The discount columns are totaled but not balanced. These totals are then posted to the discount allowed and discount received accounts in the ledger. This way, cash flow and discount details are both updated in one place. So in this video, we have learned the meaning of double column cash book, features of double column cash book, advantages of double column cash book, format, and we have understood step by step double column cash book with the help of an example. Now you know how to record transactions in a double column cash book step by step. In the next part of this series, we will move on to the triple column cash book, where we will add the bank column along with the cash and discount to cover all the cash flow activities in one book. If you found this video helpful, don't forget to like, share and subscribe to Accountant's Desk for more clear and practical accounting lessons. And if you are a small business owner who need professional bookkeeping services, just fill out the Google form from the description and we will reach out to you. Thank you for watching.